All right, today we are digging into a really interesting one. RB Global, that's ticker RBA. Now, this is a company that has totally reinvented itself, and it's standing at this huge crossroads. It's a fascinating story, really. A legacy business making this absolutely massive, transformative bet on its own future. And that really brings us to the central question we're trying to answer here. Is this huge, radical transformation, we're talking a multi-billion-dollar merger here, is it a stroke of pure genius that's going to create a new industry giant? Or is it a reckless gamble that's just stretched the company way too far, way too fast? Let's dive in and see if we can figure it out. So to really get a grip on the scale of this bet, we've got to look at how this company was, well, completely reborn. And I mean it. This isn't just some simple acquisition. We're talking about a fundamental change to its entire identity. RB Global started way back in 1958, but they were called Ritchie Bros back then, a pretty traditional auctioneer for heavy equipment. And for decades, that's what they did. But then in 2017, they bought a company called Iron Planet, and that was a huge move into the digital world. And then, bam, the earthquake. In 2023, they merged with Insurance Auto Auctions. You might know them as IAA, and that's what turned them into the massive, diversified marketplace we know today as RB Global. Okay, so with that history in mind, let's build out the bull case. Why are so many investors looking at this and feeling really optimistic that this massive transformation is actually going to be a huge success? Well, for starters, just look at the sheer scale of this thing. The new combined company is an absolute powerhouse. It's pulling in nearly $4.3 billion in revenue for 2024. And listen, this isn't just a little bit of growth. This is a quantum leap forward, and it was made possible entirely by that merger. But the real magic, the core of the entire bull case comes down to this one idea: network effects. The best way to think about it is like a flywheel. The more stuff they have on their platform, doesn't matter if it's a bulldozer or a salvaged car, the more bidders it attracts from all over the world. And more bidders? That means better prices, which, you guessed it, attracts even more sellers with more stuff. It's this powerful, self-reinforcing cycle that is incredibly hard for any competitor to break into. And this chart right here, it just illustrates the financial impact perfectly. I mean, look at this. Before the merger, back in 2022, their adjusted EBITDA, which is just a key way to measure profitability, was sitting around $552 million. Now, post-merger in 2024, it's expected to skyrocket to roughly $1.3 billion. So this isn't just some theory on a whiteboard. The strategy is already paying off in a huge way on the bottom line. So how did they pull this off? Well, the really crucial part is that by combining heavy equipment with auto salvage, they've created this totally unique omni-channel marketplace. What does that mean? Well, for one, it doubles their potential market. It makes them a one-stop shop for a massive range of commercial assets. And it lets them cross-sell to completely new customers, like insurance companies who were never their clients before. On top of all that, they can now layer on these really high-margin services like financing and data analytics. It's a pretty smart play. Okay, so that bull case is pretty compelling, right? A bigger, more profitable company with a much stronger competitive advantage. But every big bet comes with big risks. So now it's time to flip the coin and look at the bear case. And this, right here, weighs out the competitive reality in stark terms. In this new auto salvage market they've jumped into, their main rival is a company called Copart. And just look at this gap. Copart's operating margin is more than double RB Global's. That means Copart is just way more efficient and profitable at this game, and that sets an incredibly high bar for RBA. Honestly, closing this gap is probably their single biggest challenge. And here's the other piece of the gamble. This number, 1.17, is the stock's price-to-fair value ratio. Now, what that basically means is that the market seems to have already priced in all that optimism we were just talking about. The stock is, in a way, priced for perfection. And that leaves very, very little room for error if things don't go exactly as planned. So all of this boils down to 4 key risks that investors are keeping a very close eye on. First, their legacy business is cyclical. It goes up and down with things like construction. Second, as we just saw, the competition from Copart is absolutely fierce. Third, look, a merger this huge is always risky. All those synergies they promised, they're just that, promises, not guaranteed. And finally, they're carrying about $1.7 billion in floating rate debt. That makes them pretty vulnerable if interest rates keep going up. But the numbers and the strategy, that's only part of the story. With RB Global, there's this major wild card we have to talk about, and that's the drama that went down in the boardroom. I mean, this quote really says it all. Picture this, it's August 2023, right after they pulled off this massive merger, and boom, both the CEO and the CFO are out. They just abruptly leave. The board then puts out this statement basically saying there was a huge fight over the CEO's pay. Now, that kind of very public drama at the very top, that's a huge red flag for any investor. So this whole turmoil thing really frames what the company is today. It has gone from what one analyst called a sleepy niche business to this high-growth, high-stakes enterprise. And when you make a change like that, you attract a lot more attention. Scrutiny, activist investors, and yep, as we just saw, major leadership shakeups. So stability, that's not something you can take for granted here. Not yet. All right, we've laid out the powerful bull case, and we've looked at the very real risks in the bear case. So where does that leave you as a potential investor when you're trying to size this company up? I think this scorecard does a great job of summarizing everything. Let's walk through it. Strategic vision, that's a definite plus. It's an ambitious plan, but it makes sense. Capital allocation, also a plus. They've been really disciplined about paying down their debt. But then you get the question marks. Operational execution, the jury's still out. Integrating IAA is a massive job, and it's still a work in progress. And governance? Well, as we saw, that's been mixed, to say the very least. So, if you're going to follow this company, here are the 3 things you absolutely have to watch. Number 1, that margin gap with Copart. Is it getting smaller? That's critical. Number 2, their take rate. Are they actually able to earn more money from each transaction? And number 3, probably the biggest one, management stability. Can this new leadership team actually execute the plan without all the boardroom drama? Which leaves us with this final lingering question. Is RB Global a masterpiece in progress, a brilliant combination of 2 industries that's going to create a resilient, long-term winner? Or is it just a house of cards, built on a super risky, expensive merger with a shaky foundation of governance and facing down some really intense competition? At the end of the day, the answer is going to come down to one thing: their execution.